Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Monday, January 6th. First official video of the new year. Hope everybody enjoyed their holiday season. It's really great to be back to work on a full-time basis now. Really excited to jump into the markets and have a good video today to really kickstart the markets. We're going to talk about some great opportunities of what we're going to be looking at in the next few months. To trade, and let's just really dive right in. On Friday, markets were very, very light, obviously, during the holiday season. So you have to really kind of put aside what has happened. We had a couple of days of weakness. Markets kind of rolled over into the close on Friday, but really, generally, you really can't take anything serious on that move because there's nobody around. Actually, today obviously will be the official first day back from the holiday season, where a lot of the big traders, big money managers, fund managers are really coming back to work to really start putting money to work for the 2014 year. Okay, so real quick, let's just run down the numbers. Dow Jones down, up 28 points. Nasdaq down 11. S&P up 61 cents, and the Russell up 5. So really not much going on. Right after New Year's, it was really light and actually very, very whippy, and that's why a lot of traders calls and saying, hey, what do you like to trade? I personally like to stay away unless there's absolutely something that really stands out to trade. Other than that, I would really not be looking to do much, or other than just sitting around and looking for a day trade or two. But putting money to work really isn't a good thing in the first couple of days of the new year. When the fund managers get back, they start putting money to work. You'll really see, it'll be evident that where the money is going to be placed, and that's what we're going to be looking at in the coming days and weeks to position ourselves and to really take advantage of that. As you know, the big fund managers, is very hard to hide in the marketplace when they have billions of dollars to put to work. Okay, so let's see what we have here. We're going to run through a bunch of indicators. Now, just a quick recap. The market is still bullish. There's no two ways about it. Ben Bernanke spoke, and he spoke to obviously give his tenure back to the new Fed chief, which comes out, I believe Yellen will be officially sworn in, I think, in March. So they did a small taper, as you know, and the markets actually rallied on that news. So as long as the Fed is behind this market, I don't think you're going to see too much downside pressure. Now, I would like to see, yes, I would love to see a 10% plus correction, and that would be bought with two hands. But I think everybody knows that, and that's why, regardless, a lot of these fund managers are going to have to put money to work. Now, that doesn't mean the market's going to go straight up. So timing is a bit of an issue that you need to really watch. And that's where timing comes in with me with a lot of these indicators. I like to look at what the S&P is doing and then base my trades accordingly. And as of right now, the S&P, as we all know, met major extensions from 2009 lows. We're at the 1272 extension on a monthly. We've already exceeded two extensions, 1272 and 1618, in the daily chart. And so we're really at these levels where the markets are a little tough to push through, where the stocks are just kind of whipping around a little bit. Now, that's where a possible pullback would be in order. And if anything, it's going to happen now. But the first couple of days of the new year of trading, I generally have seen very bullish bias to the upside in the marketplace. So it wouldn't surprise me if we get a couple of days up, and then we would reevaluate and see where the market goes towards the end of the week. Now, most of the indicators are continually pointing up, and so that, to me, I'm going to stick with that trend until otherwise. Now, one thing I'm looking at in the E-mini S&P is 1820. 1820, if we break below and close 1820 in the S&P E-minis, then to me, we might have a tradable top in place. But, one day wouldn't make a trend anyway, so we need a couple of days. So that's going to need some work anyway. But remember, anything can happen, and happens really fast, so you want to be prepared for that. All right, so let's go right into the bullish percent index. As you can see here, still pointing up, still in a buy signal from the latter part of December. So to me, I think that that's a good sign for at least the bulls. Let's take a look at the NASI Weekly. Let me just get that to you guys right here. NASI Weekly, again, on a buy signal from the last 3 weeks. So that to me, has got plenty of room to run to the upside. Now this is like like a ship. This does not turn on a dime very easily, especially on a weekly, and that's why I like this indicator with a slow stochastic. So now we're at this area here. Plenty of room to run to the upside. So the NASI weekly looks very good. The New York Stock Exchange weekly looks also very well too as well. So to me, that also looks like everything is poised to go to the upside. The tick, again, we had that little pullback on Thursday, and the tick managed to get back above this area here, and we're above zero. Again, still bullish. Let's take a look at the new lows. Now, this is the one I was showing you guys since November. We cannot break this area. That's very bullish for the bulls. I would like to see this. If this thing was moving higher while the market's moving higher, you have some major divergence here in the indicators. That wasn't the case. Rolled right over. So this continually needs new work. Now, and we would have to reevaluate what's going on here if this, in fact, would be that inverted head and shoulders. Could be, but just be a failed pattern. So as of right now, I'm watching again to see if this thing can turn up. But again, another bullish case for at least a few days for the bulls. Okay. Now let's take a look at a couple here. New York new lows. Here's the one I was showing you. Let's take a look at the new highs. New York Stock Exchange new highs, new lows. Again, still above zero. Not what I like to see that we drop back down here. But again, 2 days going into the holiday season. I'm going to let that go, and we're going to really reevaluate a lot of these indicators come the end of the week, at the end of the week session. Now, couple of opportunities for 2014 are going to be the metals, right? They're going to be gold, silver if you like to trade it, but gold is going to be, to me, one that I'm looking for. I almost pulled the trigger on buying gold when gold was down to about 1190, but it never really went any lower to my area where I would like to begin buying gold, would be 1150 into that $1,000 support area. So gold's going to be another opportunity. Obviously, crude oil, which I'm going to show you, that's going to be another opportunity. Banks, the sectors I like are banks. I like the home building, and we talked about that with the Volcker Rule and the Glass-Steagall Act. We talked about that in the middle of December. I like solar going into the new year. There are a lot of good opportunities out there, and I really I hope everybody can follow along and be profitable from that. So I want to run into some of the let's talk about gold. Now, as you can see here, we went to 1180 and never really got to the target, but we took that and we had a double bottom. Now, we are breaking bearish symmetry, right? You can see this downtrend line has been broken. That doesn't mean that it is an opportunity to get long, but I wouldn't be long and or short gold unless it came up to here and failed. Now, when we fail, meaning that price rolls back over and gives us a trigger, okay? And obviously, you look at your trading plan, what a trigger would be. But if you get back in this area and fail and we hold that 50-day moving average, I would love to see one more flush. Remember one thing, gold seasonality comes into strength again. I believe it's February, March, and then going into the summer, just before the spring, actually. So we want to watch that. Now, copper as another good one. As you can see, we broke back out. Now, this is we all call Dr. Copper, the industrial metal. But copper really diverged from the markets at all of 2013, did absolutely nothing. I don't think this is as important. Not that it can take precedent again. But the main metal, if you're looking at a metal, you have to look at palladium. This is the silent leader, not copper. Palladium is the leader. Most of the traders down in the COMEX, they all follow what palladium is doing. And if this is breaking out, then all the metals will follow, including copper and gold and silver. Okay, so the precious metals are what you want to look at would be this. So I'm always looking at what this is doing before I actually get an idea. But gold, I'm looking at gold for a better buy, or if we get a really good retracement rally and then fail, then I'd be looking for something like that to get involved in. But right now, as you can see, we're just chopping around here, making a symmetrical triangle. Now we've got more of a downtrend channel, and we're breaking out. Yes, if palladium breaks out, copper will follow along with the other metals. So let's keep an eye on what's happening with the metals in the coming days, because there's going to be some tremendous opportunity in 2014. All right, WTI crude. When I when trading in not so frequently during holidays, you look and say, wow, what has happened to crude oil? Literally got destroyed. And that's why I said, don't chase commodity stocks or the ETFs. It will give you another opportunity. And case in point, 5 days we lost 2 months of gains. So you could see that. Now we're back to this cluster area, and we are at 20-day lows again. So this is something that you do not want to chase. It looks ugly right now, and crude is going to need a lot of work to get back to where we were looking for. Now, when we had this break higher, I remember that we bought this 20-day low here. We made some good money. We bought this 20-day low, we made some money, and then this breakout pattern, we made some good money. And I said, wouldn't be chasing at the 200-day moving average. We broke out of 200 for a few days, and we failed miserably. So this here right now needs a lot of work to do. I'm not a big fan of shorting crude oil. There's just a lot of headline risks, geopolitical risk out there. I'm not a big fan. I'm a better buyer than I would be a seller in crude, but I am not touching this right now. Needs a lot of work, so we'll just keep this on the watch list, okay? All right, so now let's talk about China. China hasn't been doing very well, and that is a concern to me. Here is the FXI ETF. Now, if we break this 20-day moving average, just like 200-day, excuse me, look at the left side of the chart. Boom. And when we break above it, we start to rally, and then we hold above it. So this is going to be a real deciding factor here. So China is not doing well, guys, as well as the emerging markets, which is a big concern for me as well. Remember, China is a big buyer of our commodities, and if they start to pull in the reins, so will the commodity stocks. Will do the same. So let's just keep that in mind for a trade in commodities. But emerging markets, EEM, breaking down here miserably. So this is not a good sign. This is one that I will be keeping a close eye on. For what the general markets do, because this hiccups, the markets will hiccup as well. Okay, all right. So let's go right into the chart pattern, and we have the TLT, which we ended with. And as you can see here, let's get into a weekly chart real quick. We have not breaking this low here. If we break this low, you're gonna have a great trade to the downside. It will continue. It will be the next area will be $89. Okay, we'll start with the 97, and then the 89 will be this area here, this band of support. So I'm watching that for a trade as well. Here's the daily chart. We're still holding this area, so just keep an eye on it. Put an alert on there. Here's the USO, and like I said, failed miserably. Now, one thing that I wanted to show you that I didn't have here, and I thought I had it on the chart. Oh yeah, here's the USO chart plotted with the bullish percent energy. We are down, we broke down, and we broke back up again. Now, here is an area where we bounce, right? And we did get a little bit of a bounce, but let's see this bullish percent really flush. When this thing flushes, and we get down to this area, that is almost an automatic buy, easy to manage. So keep an eye on the bullish percent on what that does. Okay, so anyway, the USO, as you can see, everything, we just got our crossover on our MACD, and we're starting to roll back down again, which is good. So we'll unwind our overbought reading. So still okay. Here's a GLD again. This is to me, I would be looking for an entry short to try, because it would be easy to manage. It would be just above the 50-day moving average in the GLD. Spiders, what can you say? We're still grinding up in these higher end extensions, so we just need to really be cautious here and really watch what the spider. You want to take too many longs while we're at these extensions and really didn't get a pullback. Okay, so just keep an eye on that. Here is the diamonds. As you can see, we're back into these areas here now, but we're now broke out of it, and now we're in support. So another good sign. So there's a lot of things pointing for higher prices for at least the next couple of days. Okay. Here's the IYT, the transportation sector, holding up relatively well, all above above the 20-day moving average. Same thing with the IWM, a good measure of risk here. So things look okay for at least a pullback. At least a rally for the next couple of days. Here's that 2012 low from last November, holding relatively well. The XLF, and I do love the banks, but the banks need to pull in. Again, my favorites are going to be Wells Fargo, Citibank, and J.P. Morgan are my two favorites. Now, Goldman we were traded at in November, December. That is just right now exceeded two of our targets, so that really needs a pullback on the way down. As you can see, here's Goldman again. Our 170 was a break, and then actually broke even higher. So, good trade, and looking to get back involved with the banks as well. J.P. Morgan, same thing. We had that nice flag pattern I mentioned. Broke out of it in a large engulfing candle with volume. That confirms the breakout, and now we're just exceeding our moves higher again. So Banks look great, but a lot of these prices are extended. Here's another one. Now this head and shoulders pattern is invalidated. We took out the right shoulder and took out the head. So be looking for the networking stocks. Some of these networking stocks here for higher move. Dial into the ETF and look at the top 10 holdings and look for the best looking chart. That's what I look for when I'm trading these ETFs. And we have Apple. Apple had gotten downgraded, so a good big downgrade. So this does not look too good. But let's look for a pull. A break below that 200, a break below the 50 would get us back to this cluster area here, which would be a great opportunity to at least try a long shot, easy to manage, and your stops would be just below that area. And then, of course, lastly, is the Qs hanging well above the 20-day moving average. So key indices and sectors are doing well. Okay, again, that's the evidence to me that we should move up the next couple days. But let's see how it opens. Let's see if we hold that opening range, and if we continue to break higher, then we'll be looking for some setups for the for a pullback on some good strength and some good stocks here that held up relatively well during the holiday season. All right, guys, long video, but I'm excited that we're back, and we'll be doing these videos every day as well, like we did 2012, 13, and 10. And I'm really excited here to get back to the markets. Have a great day. Happy holidays again, and let's welcome back. Let's welcome 2014 with a big bang. Have a great day, and we'll speak to you tomorrow. Take care.